Hello everyone, I'm Kunal Sodhani from Global Trading Center, Shinhan Bank, India, and we are here with another episode of understanding the domestic factors, global trends, and our analysis on several currency pairs. So, talking about first the domestic factors, let's talk about the flows. If we see the 2023 flows, they have been tremendous. If we talk about the 2024 flows, particularly March month, it has been around 52,000 crores, putting debt and equity together. And even if we talk about the April starting month, for us, we have already seen an inflow of around 7,700 crores. So flows perspective, we are positive. If we talk about the FX reserves, we have again attained the all-time highs of $642 billion. And I think it's a welcome sign because ultimately, if there is any kind of uncertainties in terms of extreme volatility or in terms of our import cover being around 11 months at this point in time, RBI has been smartly, taking those into account of any kind of uncertainties to prevent in that into the future, and thus these reserves have been very crucial for us. But irrespective of that, dollar rupee has been first in a narrow zone, and then now it has moved towards 83.40. So the expectation is, somewhat to be sticky at this moment with a below stop movement of around 83.20. But before we go and dwell more into the dollar rupee perspective, let's understand the global side also, where if we talk about the Fed officials, particularly the recent ones like Mary Daly and Loretta Mester, they have been of the opinion that they still are three rate cuts for this financial year itself, like for 2024 particularly. There were mixed comments, but three rate cuts from the initial dot plots of the FOMC, which was in December, till date, these three rate cuts are still into the price. If we also talk about the CME Fed Watch tool, if they are eyeing around 65% of probability, which is down than 70% of the probability of last week of rate cut to happen in June month. For me, obviously, at this point, the markets are not discounting any kind of rate cut from the Fed. So that's from the rate trajectory. Similarly, if we draw down to Eurozone and UK, I think it remains a bit evident that they may not be the first movers till the point the Fed takes an initial step to start cutting rates. For dollar rupee now, the forward premiums had been lower. But what is happening to dollar rupee? Why there is a move towards 83.40? In fact, on the NDF front, we have witnessed 83.71 levels also. So definitely there remains dollar cash shortage, which is one of the major reasons. Second is the dollar CNH pair, that is the Chinese yuan, that has been still, the dollar CNH pair is still moving on the right side towards 7.25 odd levels roughly, where it has the potential to go to the near highs of 734, 735, which remains quite crucial. Third, the Brent crude prices have obviously been at the near highs again for this year of around $89 per barrel. We expect there is still space towards $94 per barrel as well, followed by 97 dollars per barrel. And in fact, on the lower end, only if it goes below $82 per barrel, there may be some consolidation phase starting again. So oil, dollar CNH, dollar index again at 105 or near 105 levels. So it has tested 104, 75, 85 zone a couple of times. It did break again those levels this time, but it's important to see how much dollar index sustains around these levels, or does it have a move towards 105.80 also. So that again needs to be an important calculation when it comes to dollar rupee. So dollar index is also another criteria which we need to watch out. All in all, for dollar rupee, we continue to expect 83.20 to hold as a support at this point in time. A break below it may bring back the old consolidation of 82.80 to 83.40. But till the point it is above the closing of and not closing below probably 83.20, then we believe there is still a further upside, because as we see the NDF movements, they have been quite wild once our session gets over by 3:30. So the next level here to watch out is the all-time highs was of 83.47 three quarter, that is 83.4775, which was seen last year. So that is the first important resistance, followed by the NDF levels of 83.71. So these are the two important parameters or levels which we need to watch out on the right side. Also, the premiums are less, so there is not enough carry for a trader to go for in receiving any kind of premium. Plus, exporters are also shying away because the spot is already higher. Plus, the forward premiums are quite low, which is not entitling them to hedge longer exposures. So that is why also rupee may remain under pressure for some more time. Well, so friends, that's all from my side. From the dollar rupee perspective, mainly because that remains the most important key to understand at this point in time in terms of at times being volatile and then coming back into a narrow range. So thank you so much for your time. Hope this session was insightful. Thank you.